What is going on, everyone? My name is James Livingston Trader, back here again giving you guys another video. Today I wanted to go over exactly how I go about marking off my key levels, all the way from the higher time frames down to the lower ones, and why this is a crucial part of my trading, as it allows me to have a very clear idea heading into the market on any given day as to where we are at in our current cycle, in the current trend, whether it be on the higher time frame or the lower time frame, depending on what kind of trades I want to take. If I want to take a swing trade, obviously I'm going to be looking at some higher time frames. If I want to take a more of a scalp or day trade, I'm going to be focusing on the lower time frames, the 5, 15, 30 minute, maybe even as high as the 1 hour, etc., etc. So let's go ahead and hop right on into it. I'm going to be using TradingView here to identify all these key levels, and I'm going to be using NQ, the futures, NASDAQ, NAS 100, QQQ, whatever you're trading, whether it's in the stock market on an app like Webull or Robinhood, or if you're trading Forex, or if you're trading futures. This is essentially the market. This is what everyone correlates with. Is the market up or is the market down? They look at the NASDAQ or they look at the S&P. So for this example here, we're going to be using the NASDAQ. And like I said, this is exactly how I do it on any given stock, any given asset, whatever it is. This is how I start every single time. Start out on the larger time frame. You can start out on the weekly time frame for the purpose of this video and not making it too incredibly long. I'm going to do it from the daily down. So the number one thing that you want to look for, and this video is going to be completely raw, uncut, no skip jumps, nothing like that. I want you guys to understand exactly my thought process going through this. So the first thing that we want to identify is, where are the heavy rejection levels at? Where do we see the biggest response when we hit a certain spot? Now, first, it's going to start off with just kind of putting a level on the map, or on the chart rather, and then adjusting it accordingly until you lock it into place, put a label on it, etc. Very easy stuff for the most part. So what you're looking for here is you're looking for areas where you see the reactions. I'm going to put a line here just to kind of give a visual. So we can see that when we approached this spot right over here, as soon as we tapped it, what happened? We rejected, right? We rejected right off of it, pulled down, had a nice momentum push to the downside. Now, arguably, we could put another point right around here. Again, not adjusting it too much at the moment, just to give you guys examples as far as what happens. So just before that push up, what did we have? We had a bounce off of that same exact area. Not same exact area. We had it bounce off of this level right here that created the push up. Now, again, keep in mind, these candles are daily candles. So this move that we're talking about, right here, was over the course of about 2.5 weeks. So these are the larger moves. Again, on the larger time frame, this is where we can expect these moves that could play out for multiple days. These are more of your swing style setups. So let's get rid of this square here, get rid of this little circle here. Now, it's important to know these levels, especially ones that are a little further back, because we want to keep an eye on exactly what happened in the past, where are these past levels at, etc. Now, when we start to get into an area like we're at right now, where, we're not necessarily focused on what happened back here, we are focused on the now, or the relative past, if you will. So we're going to take this line here, and again, we're looking for that specific level, that specific spot where we can see, these little wicks. So you can see this wick down and had a nice reaction off of it, or we came up to that level, we rejected hard off of it, and we want to adjust it to just be at the almost perfect level where it seems like we've just had the most amount of touch points. For something to hold weight for me, I need to see multiple touch points across the board, at least 3, preferably more than that if possible. So same thing with this bottom line. I'm going to bring this one up here just a little bit. I'm going to place it right around here. So what you do here on TradingView is you can actually hit this little lock button and lock it into place, right? So I'm going to lock those ones in. to signify, two daily levels. So what I'm going to do, go into the settings, I'm going to hit daily key level, and we're going to keep it off to the right, make sure the text is set to black so we can see it, hit OK, boom, you got your daily level set up there. We're going to do the same thing here with this one, change color black, etc. Now you can make templates, you can save templates here, so I can hit save as and label it daily key level. So all I have to do is go down here and hit that button. I'm not going to do that because honestly I don't use TradingView a whole lot to do this. I actually use the broker typically to put these levels on directly on those charts. But for the purpose of this video, we're going to use TradingView because everybody has it, everybody can use it. So we have those daily levels set up. Now what I want to do is I want to find a more now term, it's not the right word I was looking for there necessarily, but a more accurate level for the current price action that we're involved in the last 2 weeks. Excuse me. So what I'm looking at here is I want to find again that spot where we just I'm tripping on my words here, where we consistently hit the same spot over and over and over again, and have those heavy reactions off of it. So we can see here even that we just bounced. We had a big push down initially. This is before this level was a level. We pushed up, we came back down. Now, as price action has evolved over the last couple of weeks, we can see that this general spot right here, right in here, right in here, somewhat right here, and even recently, as recent as this past Friday, right there. So we can see that 4 consistent touch points ever since we moved above and created those highs, that we came down, price action has settled, and we consistently hit this area. And what happens every time we push that area? You can see here we get a push to the downside, heavy push. See right here, we get another push to the downside, get a push to the downside, and just recently we get a push to the downside. So we're seeing consistent rejections off of the spot, letting us know that that area or that specific spot is a key level. So what I'm going to do is, again, get rid of some of these drawings. Wish I knew a faster way to do this, guys, but I don't. Don't know TradingView all that well. Guess I could have just hit Control Z like a smart boy. But anyways, so we're going to label this one. We're going to lock this one in right here. And again, we're going to label it daily key level. Off to the right, so it shows up over here. Now we've got our upside key level, as well as our downside key level. Okay, so we have these larger time frame key levels that we can now pinpoint for daily spots. Now, as we approach these areas, as we approach it from the upside to the downside, like right here to here, we can expect price action will likely find some sort of demand down here at this key level, especially on a larger time frame. Now we've got the daily one, so let's move into the 4 hour. And again, we don't want to be looking too far back. We don't necessarily want to be looking really any further back than where we just identified our daily levels, because it's already showing us those heavier, larger time frame spots we need to watch for. Now, on the 4 hour, I want to see, again, where are those reactions? We see a reaction point right here. We push this spot there. We can see another one right here where we pushed up to that daily key level. We can see another one roughly right in here. Again, this general pocket right here, it's never going to look perfect and pretty, but it will just give us a general idea. We have 1, 2, we already have 3 touch points. We have another one right here, and again, this is starting to form right now, so I wouldn't consider it a full, break to the upside or push to the upside, but it is something worth keeping an eye on, that we might even have another 4 hour key level touch happening as I speak right now. So for the time being, knowing that I can see this spot right here, this one right here, and then a little bit right there, and then a bullish engulfing off of this spot here, I am going to go ahead and mark this one off now as my 4 hour key level. Boom, just like that. Now we have a 4 hour key level marked off. And again, It's just reactionary areas, whether it be going to the downside and bouncing up or going to the upside, bouncing back down. These are just reactionary levels that we're looking for, aka supply and demand. It's a simple trading that we've been taught over time that a lot of people overlook. So we are going to now look for the upside, if there is an upside, for our key level where we're seeing the reaction back to the downside. I don't really see anything that's jumping out at me at the moment because we do have that daily level up towards the top there. So I would say at the moment we only really need to mark off 1 4-hour key level just to show us a little bit more of a micro spot that we can watch for. Now, if I go into the hourly, again, we're going to be looking for the most recent history where we can potentially see an area where price action bounces off of or rejects from quite often. So I'm not going to look back too far. I'm just zooming out just slightly to like the middle of January. Not much more than that, like 2 weeks of data that I want to really sift through. So we can see here, if we zoomed in, we can see a spot where we topped out right here, rejected off of it. We got a nice rejection here on the NASDAQ. We fell from 21.5 all the way down to 21.2. It's a 350 point drop on the NASDAQ. That's a massive move in the matter of, this is on the hourly, so this is a matter of what, 8 to 10 hours in this example right here, where we had that move down. Same thing as we pushed up over it. We created a support on that same spot, bounced up, came down, bounced off of that general area, came up, bounced down, rejected off of that area, or bounced off that area again, pushed up, created that daily, another push on the daily key level, etc. So we have an area there where we're starting to see that reaction. You could arguably say that it might even be a little bit lower here. So this little peak might have been kind of the initial start of that level, but then we saw the bounce right here. Let's go ahead and put that arrow key again. Had the bounce right there. We wouldn't consider that a bounce right there. We have a bounce right here, and we have a bounce right here. So we have 3 consistent spots right there showing us that this is a reactionary level. So now with these levels and stuff, guys, you can, if you would like to, you can color code them. You can change the color if you like. If you want to put your hourlies as like green, if you want to put your 4 hours as blue, you want to put your dailies as purple, whatever works for you at the end of the day is what you should do. So what I'm going to label this as hourly key level. I hit OK, and we're going to lock that one in. So we have an hourly key level. Like I said, we're kind of stuck between a 4-hour key level and a daily. So I'm not going to worry about putting any more hourlies in. I think that's the more major hourly key level that I want to watch for. Now we can start going down on the 30-minute time frame. The 30-minute time frame here is going to give us access to even more data as far as where are we tapping into that is showing itself as a lower time frame, more of an intraday level to watch out for. We can see here consistently at this exact spot. I'm going to make this one purple. I don't think it really matters because you can't really see it on my screen anyways, but make this spot purple. The reason I am, came up to this area on the 30-minute, rejection. Up to this area on the 30-minute, slight rejection right there, but we could arguably say that more of the rejection happened, essentially right there. We had 3 taps into it, bounced down, went down the hourly key level. Same thing right here. We had an initial reaction off of that spot even before it broke back to the upside like it is right here, but we had an initial push down right there. So we've got a couple different spots. Realistically, on the 30-minute time frame, we've got 1, 2, 3, 4, 5, 6, 7. We've got like 7 different touch points on this specific spot. So to me, that is holding some weight as a 30-minute key level. So what we're going to do is we're going to label this one 30-minute key level. Simple as that. Keeping our trading as simple as possible, and this is how you're going to find those areas on your chart on any given asset where you should be looking for either sell opportunities or buy opportunities. Simple as that. Keeping a stop loss above that level if you're going short or below that level if you're going long. once you see confirmation. What do I mean by confirmation? You need to see some sort of price action indicator that is telling you, hey, this is a good time to buy, whether it be that this starts to fill up and engulf the prior 30-minute candle, or let's just say it pulls down, has a long wick, pulls back up and creates some sort of like a hammer style candle. This is where knowing your candles is going to also come in handy, is knowing when you're seeing a reversal style pattern at those specific levels. So that's really it, guys. I mean, going down even to the 15-minute time frame, you can find these lower time frame levels to watch out for, because they are ultimately going to affect you depending on what you're trading, as far as what kind of trader you are, scalper, day trader, swing trader, etc. You're going to need to know where are those areas that I should be watching for price action to potentially react. So for me, I like to trade on the lower time frames. I'm more, I would say, of a scalper / day trader. I don't spend time in my trades for usually longer than a day. So for the most part, I'm looking at 30, 15-minute key levels, and I'm playing those levels on the lower time frame because they're the most recent levels, or the most recent to what I'm trying to trade. So again, we can label that one that we just found there 15-minute key level. And we built a support right there before, but it did push down through. We had a bounce off of it right here, bounce off of it right here, multiple touch points here before it pushed up there, even settling down as support back here to push up to a 30-minute key level. There's so many different, you're going to drive yourself nuts, honestly, trying to find all of these, but you need to pick out the most important ones. You need to find those specific spots where you see multiple touch points, and then put your level in around there. Again, keep in mind, guys, they are never going to be 100% accurate. You are never going to see exactly where that support is or where that resistance is. There's always going to be overlap. There's always going to be some sort of a, maybe a, we like to call it a gap one, where it could come down close to the key level and then bounce before it ever touches it. You know, you have to just be ready and acknowledge that as we approach these certain spots on the chart, we need to start looking to potentially act if we see something like a pattern playing out or a candlestick reversal playing out, etc. That's what this is used for. Nonetheless, guys, I just wanted to really quickly kind of help you analyze exactly what goes into mapping out these key levels on any asset, not just, again, futures or the NASDAQ or S&P, but you can use this on any stock really that you're trading. You just have to understand what kind of trade you're wanting to take on it. Are you looking for a swing trade, looking at larger time frame key levels, or are you looking for more of a scalp / day trade? It's important to map out all of these levels, no matter which kind of trader you are, but to only act on the levels that are relevant to your trading style. So hopefully you guys did enjoy the video. Hopefully this is informative and helping you guys out. I will be releasing a couple more informative videos like this throughout the next couple of weeks, just to try and help you guys as traders get better and be able to capitalize on certain moves. So nonetheless, hopefully you guys did enjoy the video. If you did, leave it a big thumbs up, comment down below, let me know what you guys think. And of course, if you are new to the channel or if you've been coming by for a little bit, please do hit that subscribe button, as it really does help me out and motivate me to keep doing stuff like this for you. Until the next time, guys, it's been real. Peace.